Alright, how's it going, everyone? Once again, sorry about the stream difficulties, but what I'll do is this will be just a refined recording of all your questions you have put in the Discord, as well as the stuff I wanted to talk about today. So the first thing we are going to go over is a CAD JPY example, which was talked about in the Discord when someone called it out. So we are going to look at why they called it out, and then kind of just going through the actual example in relation to the model and how it played out. So starting out here, you can see if we mark out the daily chart here, we have all these failure swings resting on the high, right? So wanting to target failure swings. So we'll just make notice of those. Now, if you notice down here, what do we have on the daily? We have a candle 2 closure, right? So with a candle 2 closure, ideally looking for candle 2 wick to support price higher to where? Well, ideally an expansion over candle 2 high. So letting this play out. And actually, before we get too ahead of ourselves, within candle 2, do we have a lower time frame confirmation? We do. We have that change in the state of delivery. And then also marking out the projection. How does that line up? Well, it lines up with all those failure swings, right? So you can see the 2 to 2.5 lining up with all those failure swings there. So as we let this continue ahead, right? Ideally looking for day 3, and this is where I want to talk about a intra-candle invalidation, or I just call it an intra-candle change in the state of delivery, right? So with this setup, we have our change in the state of delivery on candle 2. So this means, ideally, price is going from bearish to bullish, right? So after this, price is already bullish. We don't need another change in the state of delivery. But when you think about an individual candle as an open, low, high close, I want to see when we make a low, and then I can anticipate that expansion from the low to the high before we close, right? Now with that, there is a reversal pattern that I look for. And what is that? And that is, the first thing we get is a swing formation, right? And then the next thing is a close over, validating those opposing candles, which validates the low, right? So what do I mean by that? So I will leave that up there actually for now. So within this candle, so after the open here, I want to ideally find a low that I can trust. Now, right at this open here, we don't really make a low I can trust. So really, my invalidation, if I was going to be taking an entry, would be down here, right? But what do we notice as we retrace down here? We sweep out this little low here, right? And then also this lower time frame low. But we have a candle 2 closure there, right? So the swing formation, right, that is occurring. Now, if we're going to confirm this low, where do we have to close over? Right here, right? Validating this low and these opposing candles. So we let this play ahead and we get this close over. So now I can anticipate this low to be holding. And what is this? This is within the higher time frame candle 3. So that is what I mean by the intra-candle change in the state of delivery, right? So this is where I'm anticipating the low of this higher time frame candle to be. That's essentially what my model is trying to do, because now that I have this low, if I'm trying too long, I can just basically have my invalidation there, or I know I don't want price to go back there, right? So then ideally get expansion out of that area, which we do get, right? And then getting into the close of the next candle, right? This is where we, I'll show you why I anticipated what I did. So yesterday in the chat, I was asked about this example because someone was looking for today to reach up to these highs and they wanted my opinion. And I was saying that I agreed with it. Now, why is that? Well, we have a consolidation here, right? Now, if we're going to form another one of these lows, what is the pattern? I want to see a swing formation and then a close over. So do we get a swing formation? Now you see, this is what I want to see in the individual candle, right? So right here, we open that new candle, we sweep out this low. So that is our first step. We have a candle 2 closure here, but this low is not technically validated until when? Until we close over these opposing candles, right? So I'll let my Wi-Fi catch up here and see if it does. And we haven't closed over it yet, but here we get that close over. So you can see here was the invalidation or low of candle 3, right? Even though it wasn't the low, it's the low we were, validated. So now we can anticipate this low to hold, right? Now, there was a question. This doesn't occur in the kill zones. Well, this is CAD JPY, which is a yen pair, so Asia tends to get a little bit more movement. But even if we are looking within the daily profile, which is what their question was, what happens? Well, we'll go take a look at this little example here, or this reversal, right? What do we notice? We can't close over here. Okay, that's our first little sign that we could get a retracement. Now here, right, we start to form a swing. When would that be validated? When we close over here, but what happens? We don't close over, we close back inside the previous range, and then we go lower, right? So now we are looking here. So now if we form a swing, right, we'd be looking for a swing in here. Why? Well, this is our invalidation for our whole entire setup. So if we get a swing in here, we're very close to our invalidation. That's ideal because then we can catch the expansion. Now here we get a candle 2 closure, right? Because we close back inside this candle. So I'm anticipating this to become a validated low, but what do I need? I need the close over. So do we get this close over? Let's let my internet catch up, and we do. So now I have another invalidation, right? And so then I will continue that, right? And we'll just kind of let this play ahead, or I'll just leave the replay mode so it doesn't waste your guys' time. I'll actually pause OBS until this loads. So here we are back, and you can see, right, we reach back into that opposing candle. Here is our invalidation. What do we have? Well, this is a candle 2, but not a candle 2 closure because it closed outside here, right? So with that, letting candle 3 form, what does candle 3 do? It closes over the opposing candles. So now validating this low, and that is our candle 3 closure to give candle 4 expansion. And now you see we expand higher. So you can see even within the daily profile, which was what that question is out, we have London forming this reversal. So when we come into New York and we retrace, that is a buy because London reversal, New York continuation, and you can see how that aligns with the bias, right? So you can see that is what happened today. My anticipation was something like this, right? So fairly close. But that's what I wanted to talk about is when I'm looking in candle 3 and 4, I'm really just looking for, can I find an invalidation that I can trade off of, right? Because if I don't have a swing low forming, well then price can't reverse, right? But once the swing low forms, I want to see, can we close over to validate that low, right? So the first entry, which gives higher RR, but I would say is more risky, is that, I don't know what happened there, is that swing formation entry. And then the safer entry, which more confirmation, but lower risk to reward, is after we close over there. Now the next thing we're going to go over is just a few more examples of that daily to the hourly setup, because that is honestly my preferred, one shot, one kill, or just setup that I like to see. So you can see here on natural gas, this was asked in the chat, and so I went ahead and marked it out, but we'll go over that. So once the indicators load in here, not sure why they are not, be right back. So here we are on natural gas. I did lose my drawings, but let's go ahead and look over why to anticipate downside move here today, right? So someone also called this out in the chat today, and I just went ahead and charted it up, but you can see what happened this previous day. We had a candle 2 closure, right? So with that, I want to first mark out 0.5 of this wick, because that would be where I anticipate a reaction. And then I want to look in candle 2. Do we have a change in the state of delivery? Yes, we do. We close below the series of up-close candles here. Now with marking out this projection, you can see the manipulation is very large, right? So if I was going to mark this out, it just doesn't really make sense in terms of the range I'm working with. And that is why on this specific scenario, I'd use this little failure swing here, right? And so now you can see how the 2 to 2.5 lines up with that previous low, right over here. So this morning, right, all I want to look for is points of interest in this area right in here. Well, if we look over, what do we have? We have a little volume imbalance in here. We can mark out the mean threshold of this order block if we want. Right, marking that out. Because ideally, we respect 0.5 of the wick and 0.5 of these opposing candles, which you'll also learn from AM's lessons, right? So we can look at the little volume imbalance in there, right? Or you can just mark out fair value gap here, right? And then, we can drop down to the lower time frames to gain an entry to this first sell side liquidity, second, and then likely looking for this third one, right? As a continuation of order flow down. Now, that is kind of just an example I wanted to go over. You can see it appears on multiple different assets, multiple different time frames. So just a quick example. We'll go ahead now and hop into an oil example, which was talked about in chat as well. And this one is an hourly example. So we'll go ahead and go back here and we'll walk through the model as well. We'll go ahead and clear up some of these drawings here. Now with this, we see on the hourly, we took out a swing low here, right? And we also had a candle 2 closure. So looking for price to be supported by 0.5 of this wick to reach higher to these equal highs from the overnight session, right? We also have little equal highs right here. What do we need to look for? Do we have a change in the state of delivery on the 5-minute time frame? We do. And then projecting it out. Now this one looks like it might not make sense in terms of the range, but we have the one right here, 2 to 2.5 off of these highs over here, and then our 4 to 4.5 up there, right? So kind of a larger range, but it still makes sense, right? So now, once again, all I'm looking for in this candle 3 is I want to find a reversal pattern, right? So that swing low, and that'd be the first possible entry, or the confirmation, so the close over, validating that intra-candle low, looking for the expansion. So that is why I had this marked out, because if we're going to respect 0.5 of the wick and 0.5 of that opposing candle, we form a swing low in here, right? So letting that reach lower, you can see we sweep out a low, and what do? We close over this opposing candle. So now I can anticipate we had this low that we'd anticipate to hold, right? Just according to the model. Now I can anticipate this low to hold within what? This whole hour period, right? If we're going to get expansion, it's going to be holding throughout this entire hour. So with that idea in mind, I can either just take an entry here, right, on the open of the next candle, or I can wait for a retest, right? My first target there. So we'll just say we take the opening, right? So entry on the next candle. Let's just walk through this real quick. So you can see, start to get that expansion. What do we notice here? A little bit of consolidation, right? And what do we see here? Here we get another sweep of lows or reach into a fair value gap, right? It's just a sweep of lower time frame lows. And then we close over all of these little down close candles in here. So that gives me now a new invalidation to continue higher, right? And we get this continuation higher. And now that we have a nice strong candle 3, let's see how it closes, right? You can see it still closes strong, right? Right here, very strong close. So I want to see the upper half of this support candle 4 higher if we're going to continue. What happens? We get a series of opposing candles. We close over, right? Candle 3. Now I have a new invalidation, right? And basically we just continue this until we get stopped out, right? So reach down, right? We have a little opposing candle here. This one makes sense to use a smaller one because this wick reaches all the way down. New opposing candle. Could use this one as well. I prefer to just use the wick. Here we have a down close, right? This one never got closed over right here, right? So then new one, down close. You could still consider this one because it made the lowest low. Now we have a new invalidation, right here, right here, and then would have gotten stopped out on runners here, right? So you can kind of see how to either trail stop losses or just determine order flow using the reversal structure, right? So that's just another example I wanted to go through, and shout out to everyone that caught that. It was a great setup. So let me go take a look at a few more questions. So just read another question, and we'll just stick on this example. We'll go ahead and replay, but they're just talking about the invalidation of candle 2. Let me double check that real quick. Actually, let me reread this. Okay, I think I know what they mean. So when I'm looking for candle 2, this wick to be respected, the question is where, like, how do I know if this is being respected? And what I look for is exactly what I showed. I want to see that invalidation or the swing and then the close over form in here, right? So now let's say we have this area here, but instead of reaching down and closing over like this, price just moves lower here, starts to close down, does something like this, right? That's not something I want to be in. And I think I actually had a great example of this. Let's go to NQ 5 minute. Let's pull it up. I think it was like right in here somewhere. Right there. Let's go ahead and pull this up. So right here, you can see we have a candle 2 closure on the hourly. And then if we're marking out 0.5 of this wick, we want to see it be respected, as well as 0.5 of this opposing candle, right? Because this is our change in the state of delivery on candle 2. What do we notice about this candle here? One, it's reaching above here, and it's closing over the 0.5 of this order block, right? So that's kind of the indication where it's not forming a swing high right here, right? Because if we're going to expand, we're going to form a swing high right here and then just drop down, right? So when we don't do that, that's when it's likely to just kind of sit around, right? And then the only other opportunity here is we close below these series of candles now. We can't do that. And then, you know, we get the New York Open, but after we took out these highs, right? So that's kind of, hopefully that answers your questions about is the, you know, equilibrium of this wick being respected. I use the lower time frames and I'm looking at these closures, right? And the same thing happened today with the hourly, right? So going into today, you can go back through my chat, right? I was looking for, if we're going to form a short opportunity, it will be right here or using the equilibrium of this candle, right? You can see also the daily wick. So let me mark that out. Right, so it's just the same thing over and over, right? 0.5 of this wick, right? You can see how they all line up right in there. Now what I want to see is, do we form a swing high in there that is convincing, right? And we don't, right? We get a very aggressive move higher here, right? And on this candle here, when we started to close over, that's when I put in my chat where it's like, shorts are just invalid for me, right? And that's generally a good indication that we're just going to seek this high out and it's going to fail, right? Because if my bias is wrong to reverse here, unless price is just going to sit here the entire time, it's more likely to go run out that high. So hopefully that also helps out there with your question. So let me go take a look at a few more. So we had a question about, you know, just these invalidation, right? So like if this high or low is protected, under my definition, when is it like not protected anymore? So for example here, right, when we form this little swing low, close over here, I'm not anticipating this low to be taken, right, until when? Well, I want to look to the left. I want us to sweep out a high before that, right? So when we take out this high here and form this reversal, I'm okay with sweeping this out because I'm more focused on liquidity now, right? You can see it still holds and we're getting a candle 2 closure here currently, but that is just the quickest example that I could find of what I mean. And so kind of a drawing on this is, let's say we have highs over here, right? And we get something like this, right? Let me just draw it. So when we get this sweep here, close over, say we have a little sweep into there, close over, I'm anticipating these to hold, right? That low, until when? Until we go and deliver to this liquidity here. Now, once we deliver to this liquidity, unless I'm really confident on a trend back higher, right? I'm more so focused on if we form a swing up here and trade the other way, I'm not really focused on this being a protected low anymore. I'm more focused on it actually just being the liquidity for the other side. So hopefully that helps out as well. Let me go take a look at a few more questions. All right, so I had a question on adding and subtracting timeframes. And what I'm going to be honest with about this is it just takes a lot of practice and experience of looking at the same pattern and then going up and down a time frame. The nice part with my model is you'll start to learn that I'm trying to trade wicks on the higher time frame, right? So like waiting for this wick to form and then trading the expansion after that. But one quick little exercise you can do is when you see an aggressive move lower and then back into the range, right? So you can see this aggressive move lower, sweeps out lows, comes back into the range. Because this happened in a short duration, right? That's going to form a wick on a higher time frame. So if we go ahead and, go to here, and we just start to move up time frames, right? Like 15-minute, you'll see it's probably 2 candles here, but you can see nice full-bodied aggressive movement. On a higher time frame, this is starting to form a wick, right? You can see that. So then you also can see wicks, and you start to realize, okay, I know price opened here, made a move down, then back up, right? And since it happened all within this duration of time, you know kind of what it looks like on the lower time frame. So not really much I can say on that other than it's a lot of practice. And just, when you see this on a higher time frame, what does the lower time frame look like? It's just practice. So someone's question was about NQ today. That's natural gas. Let's go to NQ. And saying, a lot of people were expecting shorts today. When does that become invalid? And I kind of already talked about that. We'll just do it one more time. I was looking at the wick of the daily candle. Now, I would have preferred if the daily candle had a weaker close. And what do I mean by that? You can see how we closed basically just at our previous day high, right? A weaker close would have been a close down into here, making, a bearish candle. But since we didn't get that, I was still looking for a wick here to cause this reversal. Now, when did it become invalid for me? When it disrespected these opposing candles and 0.5 of the wick, right? So looking at the mean threshold of this, or 0.5 of it, this opening price, and here, once on the hourly time frame, or the time frame pairing with the higher time frame, it started to close over these right here. That's when I realized my idea is invalid, right? And that's what I said in chat. You can go take a look at that. But hopefully that gives you kind of an indication of when I realized I was wrong, right? All right, so another question here. We're going back to oil. And you can see, if we're taking a look here, we also formed this swing right here. Now, why didn't this one work? Because at the time, you don't know it's not going to work, right? So let's take a look at it. Well, the first thing you realize is we're slightly short of taking out this candle's low, but let's go to the lower time frame. Right, here we are on the 5-minute. Pull up the hourly candles. You can see we're just shy of that, but let's take a look at this, right? And we'll replay it real quick. Or we'll just, somewhere right in there, just so it's not off the screen. But you can see right here, we get a candle to closure. It's paired with the change in the state of delivery here. So I'd want to see 0.5 of this wick, right? Respect price or support it higher. And here, it's a little confusing. We could use both of these projections actually because of the lower time frame, but using that. And the reason for that is this made the low and also the high. So it's either going to be from right there to right there, or right there, right there. You can go check that out on the lower time frames, but a lot of times it'll just be that single candle. But the thing you notice here is, yes, we get this expansion, right? We start to get this expansion on candle 3. Let's actually talk about this. Let's see. Right, so you can see we start to expand. Now, if we're going to get a continuation higher here, what do we want to see out of candle 3? We want to see a nice close, right? So a nice strong close, something like this in the other direction, right? So something nice and strong. But what do we notice here? We get this move higher, we reach into this little 2 to 2.5, this imbalance in here. Okay, cool. We just want to see us, even if we just hang out here and close strong, can look for a continuation on the next one, right? But what do we notice? Remember I've talked about this a few times, but if we're going to, continue order flow higher, we're going to respect down close candles, but also what I don't want to see is the formation of bearish order blocks, right? Because if we're going to continue higher, don't want to see bearish order blocks. So we'll mark this out with 2 colors here. So the red will be the bearish, and the blue will be the bullish. So if we're going to continue higher here, I'd like to see this down close candle be supported, right? And then not to close below here. Because if we close below here, we have a series of up close candles into a point of interest. If we close below them, this looks like it goes lower, right? So taking a look, this is the first clue where it's like, okay, this may not be looking, great. But another way to look at it is, okay, if we come back up, close over here, that's okay, we may continue higher, right? So I'm just looking at the lower time frames and then the close, which is in a couple candles. And you can see this is not looking hot now, right? But as we let this candle close, what do we notice? So it closes right here. What do we notice about this close here? Is that strong and bullish? No, it closes back inside the range here, right? And is bearish, right? So we get that initial continuation lower. So that's kind of the few clues you can look at it, is if we're not respecting these up close candles, right? Or down close candles in an uptrend, and we start to form bearish opposing candles, right? That is not what we want to see. Versus something like when we get the actual expansion, right? If we're just looking at when we would form bearish candle, a bearish opposing candle, right? Do we get there? No. There's the series, right? Do we get there? No. Here's that initial series. Nope. Okay. Here's another series to make a high. Do we get there? Nope. Okay, here's another series. Oh, there we get the close, right? So you can see in expansion or with this order flow, we'll never close below here unless we're going to change the trend, right? So then right here at this new candle, once we close below here, it's like, okay, this expansion, it's either going to go into a retracement or a reversal, right? So hopefully that helps out with why that one didn't work. Another thing is generally, I haven't watched oil a ton, but I like to see like more 8 to 10 to form a low. That's just kind of what I've noticed, is like almost like a London close reversal, but I don't really watch it a ton. But hopefully that helped out and answered your question. So the next question was about trailing my stop, and that's also, a way to look at it. So I can look at when we talked about those invalidations get hit, or when we close below, right? And in this case, both of them were kind of at the same point, right? We have this candle that gets closed over. So if we're going to continue higher, or at least in this next candle continue higher, then I don't want to see us reach this low or close below. What do we do here? We reach the low and close below, and that's when we form this little swing here, start to get our retracement or reversal. Now this also leads me into another part of my model that's just, I don't really say much about it because it's just kind of built into the model to keep it simple. But if you notice, I only talk about candle 3 and 4. Why is that? Well, a lot of times when you get 2 candles of expansion, right, or 3, sometimes the reversal candle has that little bit of expansion, right? I'm not looking to trade after this, right, because then I get caught in this retracement, reversal, or consolidation. So that's just kind of something I've built into the model where I'm only looking to trade 3 or 4, and I'm not trying to trade that 5th candle or that expansion, because at that point it's just kind of already gone, right? If it's working correctly. Now the next question is about kill zones or when to look for setups. And with the fractal model, right, it can really happen at any time. So for instance, right, there's lots of little, we'll pull up a 15-minute chart here. There's lots of swing possibilities in here, right? So on this trend up, we were talking about this in the Discord here. I know many people, a lot of people caught this move down here and then back up, right? So there's lots of little entries if you are following the trend up. Now, I personally prefer the higher volume times just because if you look at when London forms, right? We just go ahead and mark out London here. So I use 2 to 5, right? If I'm searching within London, right, and I catch a swing in here that is in the right direction of my bias, right, I can generally hold this through the non-kill zone hours, right, and catch this large move, right? Versus if I'm trading outside of this, you know, as long as I go with the trend, it's okay, but I prefer to go with the kill zones just because it has a higher probability of forming an actual high or low that is like left with the trend, if that makes sense. Now, lots of people, you know, you can do it at any time of the day, but I prefer when there's actual volume. You don't have to sit through as much. I think I saw another question somewhere in here. Hold up, let me find it. So one more question before I go look for that other one is just about the economic calendar and, you know, looking at these trades prior to CPI. Now, the framework was there for a short setup for me. I didn't really like the close, but I was still eyeing it, right? For an A+ setup, it's, or like higher probability, it's definitely not something I'm looking forward to trade. But if the framework is there, I'll still eye something to see if it gives something, if that makes sense. Now, like if I think for most people, it's better to be really defined with the rules. So I think that was most of the questions. I think there was a question earlier in chat. It's the 5 minutes somewhere right in here. They were just talking about this close in here, I think. I can't remember exactly what their question was, but I'll just kind of walk through this price action here and just, I was talking about it in chat. Once you see this candle closure here, and then also this strong expansion candle, you can see this is going to be the whole model right there, right? Going against me. I'm not really looking to trade shorts in here. And the reason for that is I'm expecting more of a consolidation here, right? Because I was bearish and then price is continuing higher, right? And if we already take out this high, right? I'm not really expecting a whole lot. Like personally, I was not expecting this, right? I was not, right? I think that's fair to say. And I don't really trade after 11. So didn't catch it, and did see in the Discord some people caught that move, which is great. I think they were talking about here. But what I'm saying in here is I want to be focused on the edges of the range, right? So when we're over highs, I want to be looking back into the range. When we're below lows, I want to be looking back into the range. And then from this, I can take my profit, or like in this case, when we change the state of delivery, get a continuation up, right? Or here, we close below here, continue to the lows, right? Or here, reach back, right? But then go higher. So in consolidations, I'm not really interested in when we already make a move lower and then come back in. I don't really care to try to short out of this, right? Or in this case, right, we already make this move out, come back in. Now this is a little different case, but because of the 10 a.m. open with the 4-hour candle, 1-hour candle, it's very bullish, so just the move out. But in this case, right, I'd rather not try to long in here out. I'd rather trade this back in, and then if we go to the other side, right, or trade this back in, and then if we go to the other side. So that's what I look for in consolidations, right? So hopefully that helped answer whoever's question that was on why I wouldn't want to look short in here, right? Because when you see this, right, it's either going to be a retracement or a reversal. Well, when you see this large candle right here, right, aggressive down, aggressive up, what is that? So we went over earlier in the stream, it's going to be a wick on a higher time frame, right? Zoom out, wick on a higher time frame. That's more bullish than bearish, right? right, going over to these highs. So it makes more sense to see 0.5 of this wick respected to go higher than it is to just completely reverse this wick, right? So you can see as that plays out, we respect the wick, take the high. Now it's more likely to trade back into the range, right? We have little equal lows. A little bit of rambling now, but I hope you get the point there where, or if you take a look at AM's consolidation video, it makes more sense to trade back into the range at the extremes when expecting consolidation. So this one is a little bit shorter of a recording in compared to the previous 2-hour one. I will get this uploaded as quick as possible with AM. If you guys have any questions or if I missed one, please either, if you have a question over something I answered, leave either a timestamp and a screenshot so I can go back or know what I'm talking about or what you are referencing, and I'll help you walk through that. Or if you just have any questions that I completely missed or that you want re-answered, just ask them after watching and I can do either a little phone recording or something. Sorry about the technical difficulties once again. Hopefully it won't happen again. But with that, I hope it was helpful, and I will see you guys in the Discord. So have a good one.